The cross-chain transfer of assets and information, that for us is one of the largest problems to solve. And I think with these wrap tokens, especially these 21.co tokens, my view is in the future we see a rise in new dApps that give access to the strengths of the various blockchains with enhanced capabilities, hoping that these new protocols, they have more space for design and innovation. And ultimately, I think one of the biggest things I would like to see, and I hope to see with these wrap tokens, bringing new users to access new platforms and leverage the benefits of the different blockchains.
Hey everyone, wherever you are, hope you're having a wonderful week so far here with the latest episode of the Inside Crypto Show, interviews and discussions with regular people just like yourselves. Today we are once again joined by Gurjeet Kundi, who's the Managing Director and Head of Trading at 21Co. He has a very awesome background. This is his third podcast, so if you want to find out more about his background, there'll be a link in the top right-hand corner of the video you're watching right now. If you're listening to the podcast, that link will be down in the show notes. Go check it out. We don't want to waste any more time. Gurjeet is super busy, so we're going to jump right into today's topic. Before I get started, though, I'd like to mention that anything that Gurjeet or I say does not constitute financial or legal advice. Our opinions are our own and not to be connected with either 21 Shares or 21Co. Please, everyone, do your own research. Gurjeet, welcome. Thanks so much for making time, as always. Before we jump into the topic of today's show, I was wondering if you could fill our audience in. What did we announce last week?
Thanks for having me back. Yeah, last week was a very big week for 21.co. Essentially, we've leaned on our existing capabilities to create a systemized process of wrapping tokens that unlocks massive use cases. Wrap tokens provide safe, scalable, and trusted cross-chain liquidity for the assortment of growing yet fragmented blockchains. We as 21.co now act as a technology provider to unlock the ability for counterparties to create secure cross-chain products. Wrap tokens essentially allow potential partners to introduce new tokens with security and simplicity.
Thanks, Gurjeet. I appreciate that. From your perspective, though, what is it like being the head of trading? So from the trading perspective, what is it like being working on this project behind the scenes for all this time?
I can say it was a very interesting project from start to finish. Essentially, it is new technology, working with the very high caliber people at 21.co across all the various departments. The level of collaboration on this was phenomenal. And ultimately, we managed to push this technology out. And so for me, yeah, it was intense, exciting, but also great to work with all the various partners within 21.co.
Great. It must have been an exciting process. Jumping into today's first question. For those who are new to finance, even crypto, today's topic is going to be about liquidity and crypto and market making. But some of those people who are new, right, and a good percentage of our audience are not familiar with the idea of what liquidity is. They'll know the word liquid. But if you could break it down for the new people into finance and crypto, what is liquidity and why is it important?
Sure. All the fun topics, market making, liquidity, and DeFi and wrap tokens. So liquidity refers to the ease with which an asset can be quickly bought or sold without affecting its price. On DeFi exchanges, decentralized finance exchanges, liquidity is provided by market makers who deposit their assets into various liquidity pools. These pools are used to facilitate trades between users. However, without sufficient liquidity, it would be difficult for users to execute trades, especially large ones, without experiencing significant price slippage. That ultimately means impacting themselves on price.
Thanks for explaining that, Gurjeet. Now, you come from a sort of traditional finance background, right? What's the difference when it comes to liquidity in traditional equities to liquidity in crypto, right? And why is liquidity in crypto such an urgent issue?
So liquidity provision by market makers is a crucial component of decentralized finance. Without these intermediaries, allowing users to trade directly with one another just wouldn't be possible. And ultimately, DeFi exchanges do face challenges in terms of liquidity, price stability, and efficient order execution. With traditional finance, you can look at various exchanges such as the London Stock Exchange or the NASDAQ. They have existing market makers who provide liquidity on equities, not just equities, but also ETFs. And I would say that is more of a traditional market making style role. It's very well known, and you have a number of institutions out there, from high frequency players to other market makers and banks also providing that type of traditional liquidity. whereas it's likely to be newer players, crypto native firms providing the market making services on DeFi exchanges.
That makes a lot of sense. So now let's tie in liquidity to the wrap tokens that we launched last week. And you hinted at this with your introduction and you're reminding people about our wrap tokens launches. How does liquidity tie into this wrap tokens launch?
So tying in liquidity into the market making services for such wrap tokens, there's 3 to 4 different pillars. One, I would say, is price stability. Ultimately, issuing these wrap tokens, we want the prices to be stable. And as a market maker, we help maintain the stability by continuously providing buy and sell orders. This constant supply of orders helps to reduce price volatility, making it more attractive for users to trade on DeFi exchanges and use these wrap tokens. Without market makers, the price of tokens on DEXs could fluctuate wildly, discouraging trading and investment. But we're here to prevent that from happening. On the other side, you've got efficient order execution. So market makers help to ensure that orders are executed efficiently. They do this constantly, updating their orders to reflect current market conditions. This ensures that users can always find a counterparty for their trades and reduce the time it takes to execute orders. Although we do provide these services, there are some incentives. Nice. And the incentives from decentralized finance platforms can range from the distribution of governance tokens to also sharing in trading fees on those various platforms. This does encourage more participants to provide liquidity, further enhancing the efficiency and attractiveness of DeFi exchanges, and also these wrap tokens in turn. I'd say one of the larger pieces of the puzzle here, and this is really where market makers come into play, is support for new tokens, as is the case for these wrap tokens. The market makers play a vital role in supporting new tokens. When a new token is listed on a DEX, it may not have a large user base or a trading volume in the very early stages. Market makers can provide that initial liquidity for these tokens, helping to kickstart trading activity and attract more users, and then in turn, more natural demand and supply.
So one of the things, we put out a press release, of course, like anyone does when they launch a new product, right? And one of the sort of key phrases in the press release was, wrap tokens help us bring the liquidity at scale, right? And what I want to ask is, and you've already talked about some of the points already, is how do wrap tokens help us bring liquidity at scale? And what was wrong with previous solutions? Because on this podcast, we've had multiple organizations and protocols saying, oh, we are doing cross-chain liquidity and we are doing cross-chain trading. And like, why are we better, or are we better?
So ultimately, the overall blockchain ecosystem, it continues to thrive, but I would say it is fragmented by chains that are not interoperable. So current solutions to the cross-chain conundrum, they are fairly new. They come with their own complexities and also their own security issues. And when I say this number, it is off the top of my head, and I'm sure one of our viewers will correct me, but I think alone in 2022, there was $2 billion lost due to bridge hacks. And so as 21.co, our wrap token solve this by providing a collateralized system that benefits from our expertise with ETPs. And we act as a custodian and systematize wrapping tokens cross-chain into the common ERC20 standard.
Nice. And just a reminder as well, right? Krish talked more about this as well. Gurjeet is touched on the same point. Is Krish used the word was a closed system, right? As opposed to traditional, or I guess other bridging solutions, which are not a closed system, are very open and permissionless bridges as well, which is another thing that you always hear people talk about in crypto, which is wonderful. And it definitely follows the crypto ethos, but there is a security risk there. We're doing this closed system right now at the moment. To start, Krish mentioned there could be other things to do in the future. We could go other ways, but at the moment, and this is what works, right? It is secure because it is closed. Gert, so you being part of the trading team, right? I was wondering, like, how are you guys helping facilitate these tokens and facilitating the liquidity and the trading involved? And how's your experience been so far, being that it's just been a week that we've just launched this product?
So far, I'm glad to say smooth sailing. And as mentioned before, and just trying not to repeat myself for our viewers, just providing those market-making services with respect to liquidity, price stability, and just ensuring that there's smooth execution. The trading team are helping to provide those particular services for these wrap tokens. This also includes behind the scenes sourcing the inventory for those wrapped tokens. And behind that wrapped token, there is primary issuance and secondary market trades, which the trading team helps support.
Nice. Gurj, this feels like the step into something much bigger, right? Could better liquidity give rise to newer products that we've never seen before from the crypto side and maybe even from the traditional finance side? What do you see? What does the future look like from your perspective?
So the cross-chain transfer of assets and information, that for us is one of the largest problems to solve. And I think with these wrapped tokens, especially these 21.co tokens, my view is in the future we see a rise in new dApps that give access to the strengths of the various blockchains with enhanced capabilities, hoping that these new protocols, they have more space for design and innovation. And ultimately, I think one of the biggest things I would like to see, and I hope to see with these wrapped tokens, bringing new users to access new platforms and leverage the benefits of the different blockchains.
And I definitely agree with that. I think I'm excited about what the future has to hold when it comes to sort of new users and new possibilities, which is awesome. And I think not on the script today, but I could not talk to you because I know one of the biggest things that our audience loves from you is your macro outlook. 1 or 2 minutes, or however how much time you have, what's your feeling about the market at the moment? I know when I woke up this morning, I saw China, Evergrande, shadow banks in China being exposed to Evergrande, and debt crisis there, and just overall slow growth in Asia, which has people worried. But then the Fed is like, oh yeah, no, people are worried. Everyone's very positive in the States. So a quick macro outlook from yourself before we end up today's show.
Yeah, look, to your point, I've seen these headlines regarding China as well. I'd say there's been more recently, and not just about China, Taiwan, and the geopolitics surrounding that. I'd also say we're seeing other headlines with Africa and France. And yeah, I'd say that there is some uncertainty out there from a geopolitical situation. And there's also the sad situation between Russia and Ukraine, and that doesn't feel like it's got any quick solution as we speak. And I think if we're talking before summer, I think there was this real kind of euphoria around AI and then interest rates peaking in the US and inflation ticking down. And I'd say people are reviewing that maybe rates are peaking, but they are likely to stay longer for higher. I think this is weighing on people's risk appetite. In addition, it does feel that this AI stroke huge euphoria around technology has had a solid run. I'm not saying it's over in any way, shape, or form, but I would say that as a trader, you might find people out there trying to take profits. It does feel a little bit choppy out there. So yeah, that's my take on the macro situation at the moment.
That's perfect. That is going to be the after we get through all the wrap token stuff, that's going to be the last short we have for today's podcast. Gurj, thank you again for your time. Super quick, even quicker than before, I think, but this is what's going to happen. So as usual, if you're watching this or listening to this on the podcast, you can check out Gurjeet's LinkedIn, right? You'll find stuff from him over there. You can check out all the 21.co links down in the podcast. There's 2 blog entries currently about our wrap tokens. Go have a look at them. If you have questions for Gurjeet about the wrap tokens or about macro outlook, you can pass them on to me. I can pass them on to him. Let me know what you think. And Gurjeet, thank you for your time. And hopefully we can have a better quality episode a few months down the line, or maybe even live in Zurich at some point. We'll see how it goes.
That would certainly be fun.